risk-off turn for European markets this morning with the UK's FTSE 100 index lower by 0.2%, while the Euro Stoxx 50 index is also slightly lower, off around about 0.1%, so just below the flat line. In the currency markets, the euro is struggling against the dollar at the moment, while in the peripheral bond markets, both Spanish and Italian bond yields are inching a little higher. Spain does have a bond auction later in the day, which is eagerly awaited. Good morning, I'm Ishaq, Siddiqi, and welcome to another daily market bite. I'm going to give you a quick idea of what's going on in stock markets today. Let's start off with what happened in the US overnight. Fed Chairman Bernanke offered a speech in Ann Arbor about the US economy. It was eagerly awaited as many investors were looking for hints as to the extent of QE the Federal Reserve will take over the year. They had an answer by Fed Chairman Bernanke. He isn't impressed by the current state of the recovery in the US economy. He reckons that there's still a lot more work to be done, and for that reason QE is going to stick around for a little longer than some of the worries that we had earlier on this year after the Fed meeting minutes, which suggested that there's a bit of a discord between FOMC members as to when they want to end QE. The chairman also mentioned his worries about the looming budget battle in the US, and that the US economy, that the US lawmakers need to come together and work out a viable solution to avert the full force of the fiscal cliff, especially raising the debt ceiling. He reckons that an outlook beyond February right now looks kind of murky for the US economy, and that they would need to essentially deal with this huge issue of raising the debt ceiling before there could be a more improved and optimistic view on the US economy going forward. Now, in terms of what's going on in Europe, we've had some pretty poor German GDP figures for 2012. It came in at about 0.7% versus 0.8%. That's a contraction, not a gain on that. So suggesting that that's a gain, not a contraction, so up 0.7%. The expectations were up 0.8%, so slightly weaker, but refueling some of the worries about the German economy. Germany is seen as the engine of growth for Europe, so the fact that it's struggling at the moment obviously suggests that people are worried about the shape of the of the European recovery that's going to take place in 2013. Now, in terms of what's going on in stock markets, big day for retailers. H&B shares in the UK are suspended. The retailer in the UK is essentially called in administrators following a pretty difficult year and a very tough Christmas sales period. It looks like it will continue trading until they find a potential buyer, but people aren't hopeful that H&B will. Many people think that the business model is essentially dead now, and that the company has had a significant market share eaten by rivals like Amazon and other online retailers. Also, it must be noted that Burberry had a very strong update for the fourth quarter. It's currently topping the FTSE 100, and also H&M, the fashion retailer, presented a pretty strong trading update. So good for those two, but a pain for H&B at the moment. Other than that, there's not much else going on. We're looking forward to the US session to get some more reaction to how US investors feel about how Bernanke's speech went down yesterday in Ann Arbor. Thanks for watching your Daily Market Bite, and tune in for another one tomorrow.